Everyone, welcome. You're watching Markets Today. I'm Sakshi Batra, and on this edition, we discuss everything that the stock markets have gone through throughout this trading session. Where were the gains seen? Where were the losses? And what happened to your investments throughout the trading session? Next 4 minutes, don't move away and do subscribe to our YouTube channel as well. Well, it was the fourth consecutive session when we have seen the market slip in trade. In fact, both the Sensex and the Nifty ended this choppy session on the Monday with minor cuts as investors globally remained on the back foot amid the concerns on the Ukraine Russia crisis. There is every day some kind of movement, whether on the positive or the negative side. So, investors are not yet sure of what really is going to go forward from here as far as these geopolitical tensions are concerned, until and unless we do see a clear cut picture emerging on either side. The markets are unable to decide its course of action as well, and which is why a lot of volatility is being witnessed right from the last 1 or 2 odd weeks as well. And it remained so in today's trading session as well. We've started the day on a weak note as well. Now, remember, there were losses in autos, in metals, and in consumer stocks that pushed the headline indices lower today. However, there were some gains in financial shares that actually limited the downside as well. At close, if you see, as far as the closing levels are concerned, the Sensex was down 149 points or 0.2% in trade. It ended at 57,683. The Nifty was down by almost 70 odd points. I would say it was an equivalent kind of a move when you talk about the opening and the closing levels today, almost similar. Levels were seen, and therefore any kind of movement, it's been very very sideways when you talk about the closing and the opening levels, but very choppy during the session as well. Now, about 678 shares advanced in trading action, but it was more losses. 2693 shares declined, 116 shares remained unchanged towards the end of the session. It was the likes of Coal India, Hindalco, UPL, ONGC, and Adani Ports as the top Nifty draggers. On the other hand, some of the IT majors like Wipro, Infosys definitely helped the markets. ICICI Bank helped. Sri Cement and Power Grid Corporation definitely helped stem the losses today. Except for banks, all the other sectoral indices ended in the red, with capital goods, FMCG, metals, oil and gas, and pharma, even power and realty stocks. And these indices were down by 1 to 2 odd percent. Talk about the broader markets. Both the mid cap and the small cap indices also fell by about 0.8% to 2.2%. So, very sharp declines coming in for the broader markets this time around. As far as the specific stocks are concerned, we did see some fall on Indigo shares that slipped 3% as there was a promoter resignation over the weekend. BSE Healthcare Index slipped 1%. There were, losses being seen on the likes of Bliss GBS Pharma, Solara Active Pharma Sciences, Krishna Institute of Medical Sciences as well. India Bulls housing fell 9% from day's high as well. There were reports of Enforcement Directorate conducting raids at the India Bulls finance centers in Mumbai. Reports also suggested that a joint team of ED Delhi and Mumbai have been conducting these raids. Remember, this comes right after ED had registered a case based on the Palkar FIR, which said that the company had siphoned money and invested in their own shares to also increase the prices. So there is a rate happening right there, and therefore you can see a reflection on the stock prices of the related stocks as well. Now, when we talk to some of the experts to understand what really is happening on the stock markets and how should traders and investors really position their money, we did speak to Manisha of Nifty Triggers, and he believes that there's a major resistance in the 17,490 to 17,510 zone. And a break above this will definitely take Nifty above 17,600. On the lower side, he believes that 17,000 200 or thereabout, 17,265, that could be something that one should keep an eye out on. A break below that can actually lead the Nifty slipping towards 17,100, 17,050 levels too. Now, Nifty definitely continues to hover listlessly in a narrow trading band is what he believes, and the intraday volatility declined, but the range bound trading movement in several stocks definitely gave no room for any directional plays in the moment. Now, he also believes that this isn't true, at least top frontline stocks as well, is what we got to witness today. The narrowness of the price movement could also be a fertile ground for non directional traders, but for traders seeking any kind of directional moves, definitely he believes that there is a time to wait and watch right now till the time markets definitely find their way out of this entire confusion over the geopolitical move right away. For the time being, he expects the Nifty to trade in the range of 17,000 to 17,500. And he also believes this is the range in which we will also see February expiry really taking place as well. As we move forward, of course, there will be an eye out on what kind of global movements do we see for tomorrow. Already, we are seeing some gains in the US futures. The euro has gained, European market have gained as well. So that could reflect better for the Indian markets opening tomorrow. But definitely, any dialogue coming through as far as the Ukraine Russia crisis is concerned will definitely play a part in which the markets decided its next course of action as well. That's how the market setup went by in today's trading session. We'll keep you posted with everything that's buzzing on D Street. So don't forget to subscribe to our YouTube channel and definitely give a thumbs up to this video if you liked it. And also share with us any kind of comments and feedback if you may have with the content that we are showing you on our video platform as well. Thanks a lot for tuning in on this edition.